Hello and welcome to ECON Dork. I'm your host, Ellie Quibrium. We are joined tonight by a special guest, economist Thomas Piketty, whose book Capital in the 21st Century made waves last year. Thomas, thanks for coming on.
Thank you.
Can you tell us a little bit more about this book?
Yeah, sure. So this book is really a study into the increasing rates of wealth inequality in the world. Over the last 3 decades, wealth inequality has grown larger in most developed nations. One startling statistic is, for example, that in America, 1% of the population, the top 1%, own 42% of the national wealth. So this book is looking into how and why this occurs. And what we have found is that due to the nature of capitalism to have an increasing return rate to capital, when the return rate to capital exceeds the growth rate of the economy, this means that the rich are getting richer at a faster pace than the average person.
I'm going to take a video question from one of our viewers.
Hi Thomas, I was just wondering how relevant you think your argument is to Australia. We have much lower wealth and income inequality in Australia compared to America and the UK. The top quintile only have about 60% of the wealth. We have a strict superannuation scheme where everyday working Australians have access to wealth in the form of super. We have high marginal tax rates and marginal capital gains tax rates. Added to that, we have a generous social services, a tax-free threshold, and a generous healthcare system. I'm wondering if wealth inequality is something we should be worried about.
What are your thoughts on that, Thomas?
Yeah, so I can see where she's coming from because, should we care about wealth inequality when low-income earners are taken care of? So, for example, in Australia, there is a generous social service system. There is access to health and education. I would say for sure, in my book, education is marked as one of the instruments for decreasing wealth inequality, and Australia has a very respectable merit-based tertiary education system. Also in Australia, we have found, there's tighter financial regulation, and we have found that when there's deregulation on the financial system, R tends to be higher. So in this way, Australia is better than America and possibly the UK. However, there is still rising wealth and income inequality in Australia. Of all the OECD countries, Australia is the 11th most unequal of all the nations. And even though there are more progressive marginal tax rates than America and capital gains tax rates, they're nowhere near what they were in the 50s, 60s, and 70s when wealth inequality was much smaller. The proportion of first homeowners who are buying homes in Australia is diminishing, so this signals that there is a generation coming through who do not have access to property as well. So whilst the situation may not be as serious and may not be as painful for the poorer people, I would still expect that if Australia stays on the path they are on, I would expect to see a more unequal and more inequality with wealth in the next 20 to 30 years.